Hello, everyone. Artificial intelligence has been the hottest story in tech for years now, and as we step into 2025, it's no longer just a buzzword for businesses. It has become a central priority for governments as well, especially in the United States. Earlier this year, the White House Office of Management and Budget rolled out two important directives aimed at reshaping how federal agencies adopt and regulate AI. These directives require agencies not only to monitor their AI use, but also to modernize their systems, adopt cutting-edge technologies, and ensure proper governance structures are in place. This shift is a massive tailwind for companies that specialize in AI solutions. Take Palantir Technologies, for example, ticker symbol PLTR. Over the last couple of years, Palantir has absolutely exploded in relevance and valuation, largely because of its artificial intelligence platform, or AIP. That platform has proven itself across both government and commercial clients, making Palantir a household name in the AI investment world. To put some numbers behind it, Palantir reported $426 million in revenue from U.S. government contracts in just the second quarter alone, which marked a 53% jump compared to the same period last year. That kind of growth is exactly why the stock has had such an incredible run recently. But Palantir isn't the only player investors are watching. There's another, much smaller company that some believe could follow a similar trajectory, Bigbear.AI, trading under the ticker BBAI. Now here's the interesting part. Palantir today is a multi-tens of billions dollar giant. In comparison, Bigbear.AI's market cap is just around $2 billion. That's tiny in relative terms. But that also means if Big Bear can even come close to recreating Palantir's success, the upside for investors could be enormous. The question is, does it have what it takes? Let's break that down. Bigbear.AI is strategically headquartered right outside Washington, D.C., in Maryland, which makes sense given how closely it works with the U.S. defense and intelligence community. Its offerings span artificial intelligence, machine learning, cloud-based big data analytics, and cyber engineering. These aren't just theoretical tools either. One of its core products, the Orion Decision Support Platform, is already in use supporting the Department of Defense's Joint Planning and Execution community. What does that mean in practice? It means Big Bear is using AI and real-time insights to help assess potential threats, plan missions, and make rapid decisions when speed and accuracy are critical. Another Pentagon contract comes through the Chief Digital and Artificial Intelligence Office, where Big Bear is tasked with building custom AI models to process and evaluate news reports from regions that may be on the verge of conflict with the United States. In other words, Big Bear is positioning itself at the intersection of national security and AI, an area where government spending is only going up. And that's not all. Big Bear is also active in border security. Its biometric technologies, including real-time facial recognition, are being deployed in critical infrastructure. One of its products, Veriscan, is already used in over a dozen international airports and by more than 60 airlines worldwide to verify passenger identities before they board flights. Perhaps the biggest deal so far, though, is a $165 million contract the company secured last year with the U.S. Army. That award is focused on transforming the Army's legacy systems into a modernized, AI-driven integrated platform. This isn't a pilot program or a small test. It's a large-scale attempt to modernize a cornerstone institution with AI. So far, all of that sounds like a recipe for success, right? But here's where things get complicated. Compared to Palantir, Big Bear faces a major challenge: scalability. Palantir has a unified platform, its AIP system, that it can deploy in countless industries and use cases. That flexibility allows Palantir to sign one deal and then repurpose its technology across multiple agencies or companies without reinventing the wheel. As a result, Palantir enjoys a cushy 80% gross profit margin. Big Bear, on the other hand, doesn't have that same plug-and-play model. Instead, it tends to build custom solutions for each contract it wins. While that might please a client, it also makes growth slower and margins thinner. In fact, Big Bear's gross margin is only about 28%. That's a huge gap compared to Palantir and really highlights how much harder it is for Big Bear to generate scalable profits. And when you look at the revenue numbers, the difference becomes even clearer. Over the last 3 years, Palantir's annual revenue has grown by an impressive 85%. In the second quarter of this year, Palantir even crossed the $1 billion mark in quarterly revenue for the first time ever. Meanwhile, Big Bear's story looks very different. Since 2022, its annual revenue growth is just under 9%. Worse, in the second quarter of this year, revenue actually declined 18% year over year to $32.5 million. The company also reported a staggering net loss of $228 million for the quarter. Management pointed fingers at reduced activity in some Army programs, but regardless of the reason, they had to cut their full-year revenue guidance down to between $125 million and $140 million. For context, last year Big Bear pulled in $158.2 million, meaning this year they expect to make less than before, even in a time when AI budgets are expanding. Now, let's talk about the stock itself. Bigbear.AI shares are up about 11% so far this year, but don't let that fool you. The ride has been extremely volatile. From its all-time high, the stock is still down roughly 69%. That's a brutal drop, and a reminder that this is still very much a speculative play. Here's how I see it. There's no doubt the bullish argument has some merit. If Bigbear.AI can crack the code on scalability, if it can improve margins, if it can grow revenue consistently, and if it can shift from big losses to profitability, then yes, it could potentially capture some of that Palantir like magic. And if that happens, today's $2 billion market cap could look dirt cheap in hindsight. But right now, those are a lot of ifs, and in investing, too many ifs usually spell risk. What concerns me most is that in an environment where the federal government is actively pushing AI adoption across the board, Big Bear is guiding for revenue next year that's actually lower than this year's. That disconnect should be a red flag. So, is Bigbear.AI stock a buy today? In my opinion, it falls more into the speculative category rather than the strategic one. If you're an aggressive investor with a high tolerance for risk, then sure, it might make sense to take a very small position, something you'd be okay losing if things don't work out. But if you're looking for a more reliable, proven play in the AI sector, then Palantir or other large-scale AI companies probably make more sense. At the end of the day, Bigbear.AI is a fascinating company with exciting contracts and a lot of potential, but the business model still has to prove itself. Until then, it's a stock that should be approached with caution, not confidence. So that's where things stand with Bigbear.AI. There's no denying the potential here, but there are also big challenges that investors can't ignore. If the company figures out scalability and profitability, it could be a hidden gem. But until then, it looks more like a high-risk play than a sure thing. What do you think? Could Bigbear.AI be the next Palantir, or is it too risky right now? Let me know your thoughts in the comments. I'd love to hear your take. And if you found this breakdown helpful, don't forget to hit the like button, subscribe, and turn on the bell so you never miss an update on the AI market and the biggest opportunities in tech. This is not financial advice.